Now we're going to go on to the Hart Return. It is on E-5 of your book. Celeste Hart, age 45, is single and lives with her dependent mother. And he gives you the address. And if you'll see, she is a hairstylist and a beautician. But let's jump to number 2 real quick. And the way you're going to figure up her cost of goods sold is exactly like you would in accounting. You're going to have your beginning inventory, which they give you. Add to that your purchases. That gives you your cost of goods available for sale. Then you're going to take away your ending inventory to get your cost of goods sold. And this cost of goods sold number is going to go on line 42 of part 3 of the Schedule C, which also goes to, well, it's going to help you figure your gross profit. I'm sorry. So this is how we're going to figure the cost of goods sold portion. All right. To that, her Schedule C gross income is going to be the rental of her operating stations, which is $68,000. We're going to have the services earned from her own stations. So we'll just call this own stations here. That she's earned is $44,000. And then she has the sale of her beauty products, which is $117,000, for a total of $229,000 as her gross revenue, which is going to go on Schedule C, just as we talked about from the lead return. Then you'll see additional expenses that she has in C there that will also go on her return. It says that in number 3 that she wants to take a quick write-off of the waiting room furnishings. That's fine, but remember that's going to be a Section 179 expense that she's going to have to do that, which is going to go on 4562 of the depreciation and amortization schedule. For computing the depreciation on the business building in number 4, it's going to be $300,000 times 2.564 that you can find in table 8.6 in chapter 8 of your return. The prepayment penalty in 4 is just like interest expense. So it will be deducted as interest in chapter 10 verses in chapter 10, pages 17 through 18. You'll be able to find those, that prepayment penalty will be treated just like interest expense. In number 5, page 6-12 of your book, the $500 fine is not going to be deductible. In 6, apparently she took a trip to try to acquire a business. Because it was business related, it will be deductible. Keep in mind, meals and entertainment are only going to be 50% deductible. They will go on Schedule C as expenses. In number 7, apparently she loaned some money to a friend, and that friend decided she has no money to pay, so she's going to stiff her friend of $7,000. Celeste is going to be out $7,000. This was not a business type loan. It was just simply a loan between 2 friends. Page 14-9 of your book says that personal losses like that, personal bad debt, are nothing more than short-term capital losses, which will go on part 1 of your Schedule D. Also, you might want to put an attachment to the Schedule D explaining exactly what happened, so that the IRS, when they get your return, will know exactly why you're claiming a capital loss in relation to that non-business loan that you have. Number 8, the gifts to the customers are deductible. $12 for the cost plus $3 for the gift wrapping. for a total of $525. The gifts to the 9 stylists are deductible. There's a limit of $25, $5 for shipping, so it'd be $30 each for those. The additional $340 state income tax assessment should be added to your state tax payments made in 2008 and claimed as an itemized deduction on Schedule A. And number 10, Celeste received $200,000 for personal injury. It is excluded from her gross income. The payment of the medical expenses does not affect Celeste's tax situation, as she was not involved in these transfers. In 11, under IRS Tax Code Section 1014, Celeste's basis in the property is going to be $140,000, which is the value of the day that her father died, just as we've seen in the lease. She has a realized gain of $18,000, which is $158,000 less than $140,000. It's going to go on the Schedule D return, Schedule D form. The proceeds from life insurance is excluded from gross income, just as we said with the lease. The interest of $1,500 is taxable and recorded on Schedule D. On 13, the sale of the stock is going to be a short-term capital loss. She had a $48,000 basis. She sold it for $28,000. She's going to have a $12,000 loss there. So her Schedule D, to give you a recap of what her Schedule D will look like, she'll have a short-term capital loss of $7,000. She will have a short-term capital loss from the stock loss of $12,000, and then she will have a long-term capital gain of $18,000 for a net $1,000 loss. In 14, the $1,000 is a non-taxable return of capital. In 15, the installment of the elevator, less the increase in the value of the residence, qualifies as a medical expense. So $5,000, which is $12,000 minus the $7,000, qualifies along with a $300 increase in utility bills for a total of $5,300. And the appraisal fee of $400 is deductible, but it will be subject to the 2% AGI limitation. If you want to see examples of this, look at example 6 on page 10-6 in your textbook. In 16, as an accommodation to a key customer who is a drama professor at a local college, Celeste spent the weekend as a makeup artist. She estimated that she would have charged $800 for the services that she donated. Well, she would have charged that, but she didn't charge that, so she will not get to have a deduction for that. In 17, the interest from the City of Lancaster bonds is non-taxable. However, the 490 must be listed on page on line 8D of this form 1040. Then you go through there and look at the rest of those and decide whether or not you should put those interest income items, as on the tax return there. You see the qualified dividends on the stock. She had a Pennsylvania state income tax refund and a federal income tax refund of $205 and $791 respectively. Also, expenditures for 2008 not previously noted elsewhere. She has medical expenses, property taxes, home mortgage expense, some professional expenses, and contribution to a pension plan. Those will be treated similarly to the way they were with the leave return. The medical insurance policy covers only Celeste and her dependents and was issued in the name of the business. So she has to deduct that as a self-employment medical insurance premiums on the front of the return, as did the leaves. For 2008, Celeste made quarterly estimated payments of $20,800 for federal taxes $2,400 for the state of Pennsylvania. She also paid $800 in local income taxes. And then you will see there the rest of the information for the Hart return. I've used some check figures for the Hart return. I'm not going to give you all the check figures that I did for Lee. I will give you that the Schedule C is going to have a total of $85,938 net income. They will have AGI when you get through listing everything. They will have AGI of, or she will have AGI of $67,861. Deductions from AGI of $12,150, and then personal and dependency exemptions of $7,000. For taxable income of $48,711. That will be the taxable income, $48,711 that you should come to. This should cover the Hart return. As I said, I didn't quite cover it as extensively because I feel like I pretty much did the lead return for you, so, and many of those items are going to be treated the same way on the Hart return. So this should get you well on your way. If you have any questions, be sure to post them either in the Ask Your Instructor forum or in the Technical Questions forum, or send me an email. Thanks, and God bless.